Good morning. Wonderful to see all of you here this morning. The theme for today's today's conference is the passive disruption, adapt or be left behind. So what I will do in this over the next 10-15 minutes is to give you a sort of a preview of what to expect through the day. I'll also set out the context for our agenda. So, friends, can anyone here tell me when was the first passive fund launched in the country? First genuinely passive fund. UTI. When was that? Okay, so it's been almost 29 years since. Okay, when was the first ETF launched in the country? And who launched it? Benchmark. And when did they do it? 2000. So actually, we are, in a manner of speaking, at least as far as ETFs are concerned, one of the earliest adapters. In 2000, even in US, ETFs were not so widely known, though they had been launched by that time, and an ETF called Spider had grown for substantial size even then. But we are one of the earliest adapters. So what happened? Now, while we launched a long time back, the momentum has actually picked up only in the last 6 years or so. So from 1.6 lakh crore, we have now grown 9 times to over 14.6 lakh crore. So this is a compounded growth of almost 20%. And this now comprises 18% of the total industry. If we look at the category-wise AUM, then we find that equity ETFs are the largest, and about 50% of that is accounted for by the EPFO investments. The other ETFs, debt and gold, account for 11.5 lakh crores, and index funds account for 3.2. Altogether, there are 740 passive funds. So I think we're very close to the number of active funds in the country, at least active open-end funds in the country. So we have 360 index funds, we have 328 ETFs, and we have 52 FOFs. And of course, we've seen the rapid expansion through indices, themes, and factors. I think a more accurate barometer of the acceptance of passive funds is actually this particular number behind me. So, index funds account for 1.5 crore folios, ETFs 2.8 crores, gold ETF by itself accounts for 1.24 crores, and fund of funds account for 17.5. Now, can you guess if this is the number, if 5.7 crore is the number of folios in the passive category, what is the number of folios of the overall industry? Would anyone try and hazard a guess? 23.5 crores. Okay. So what does that mean? That means that 21% of the industry's folios are today in passive. And this, according to me, is a more representative barometer than AUM, because this shows the participation of the investor on the ground. And we are not talking institutional investors here. So there are two markets, broadly speaking. In ETFs, it's largely driven by institutions, and the ticket size is large. However, there is an exception to this. Gold ETFs and silver ETFs have taken off in a big way, and they account for a substantial part of the ETF bucket today, and they are largely retail. Index funds are again retail, very much SIP driven. So, like I said, a true barometer of the part of the growth of the market is the folio growth story. So we've grown 8x times in the last 5 years. We've grown 15x times in the index fund category and 6.5 times in the ETF category. So what is driving this particular growth? Low cost and transparency, the advantages of a passive category, particularly index. The fact that you don't have to double guess which fund is going to do well and which is not going to do well, which is the simplicity of market returns. You know what you are in for. There is a certain degree of predictability about an investment in passive fund, which people have appreciated. Institutional flows account for some part of the action. And finally, the rise of SIP investing. Index funds lend themselves very naturally to an SIP culture. And where is the money going? We saw a lot of interest over the last 2 years or so in commodities, largely gold and ETFs. Equity ETFs have been perennially the favorite. And now what we see is factor investing. However, what is constraining the growth of the industry in a manner of speaking? So I think the active industry has done a phenomenal job of marketing itself. They weave very interesting stories about their approach and how is it possible for them to generate alpha. So a lot of people have bought into that particular story. And everyone likes to believe that they can choose a fund which will outperform that of their neighbors. Okay. So I think the hope of getting better returns, the hope of selecting a fund which will generate better returns is a major driver of funds towards active category. Okay, and even today, passives are bought as satellite, which are not a core part of the portfolio. If 18% of the industry's AUM comes from passive funds, if 21% of the industry's folios are in passive funds, what percentage of distributors are actually distributing passive funds? Would it be 18%? Would it be 21%? While I have no hard data, but my understanding, anecdotally, my own experience talking to people suggests that I would be surprised if even 10% of the MFDs are today active in passive funds. Okay? Why? Because most time when we talk to them, we hear the same story. This is good for the investor, but commercially it does not make sense for me. Okay? And then finally they rationalize it on top of it by saying that yes, we are able to generate alpha, we are able to deliver, we are able to identify the fund performance, and that's a major value to our clients. We are able to identify well-performing funds for them, and hence we see little room for passive funds. So far there has been a very limited push. Much of the money which is coming through index funds and SIPs is coming through the platforms like Zerodha and Grow. Okay, so it's seen good for investors but not great for business. What are the concerns? So there are problems as in any category. There is friction. ETF liquidity concerns remain, barring a few of the larger ETFs. Price discovery is not so efficient and perfect in ETFs. Okay, there is a substantial impact cost. And there are too many similar products. In each category, you will have, in some of the more popular categories, you will have 15, 20 funds also. And today, there is a lack of clear positioning of passive funds. Okay. However, the reality is that passives deliver predictable returns. They deliver returns in line with the markets. Active is still active in works in mid and small cap and in inefficient segments, and we have quite a few pockets of that in the country. Just to set out the global context, globally there is 20 to 25 trillion in ETFs. US ETF AUM itself is 8 to 9 trillion. As you know, two of the largest fund houses, investment firms in the world are largely passive driven, which is BlackRock and Vanguard. They are the two largest fund houses globally, and Vanguard is almost entirely in passives. Geo has an active business also, but primarily the growth and the bulk has come from passive funds, largely ETFs. Okay, so in US, the share is over 50. Globally, it's around 40%. In India, it's at 18%. So we have some catching up to do. And this includes EPFO money also. So we have a little catching up to do. So I just thought I'll give you a preview of some of the new trends which are happening in the world of passive funds. The first one is direct indexing. This is not done through the mutual fund company. The mutual fund company may not be involved at all. So investors decide that they want to replicate, let us say, Nifty. And they go to a broker or they go to a platform which creates a basket of securities, which is the underlying. So this is not done through, that does not require any AMC as a manufacturer. Okay? So they normally like to play around with the index a little because they may have certain beliefs about what funds could work, what stocks could work, what could not. So they create their own basket. So that's a direct indexing. Active ETFs, which is somewhat of a paradox, oxymoron, there are active funds which use the wrapper of an ETF. The one advantage that they offer is that they offer active management at the cost of very low cost, and hence these are ETFs which work the same way as passive ETFs. The main difference being that the stocks in the basket are chosen actively by a fund manager. So it's an active fund in the wrapper of an ETF. And there are ultra low cost structures. There are ETFs which are single stock and so on. Finally, there are advisor-led model portfolios also. So what advisors and some platforms do is they construct 3 or 4 different portfolios. These are model portfolios. They don't customize it for you. They just help you choose the right one for yourself. Okay? So they will not sit down with you and say, let's create a customized portfolio for you. They will have 3 or 4 model portfolios to offer. They will profile you and then put you in one of the categories. So these are advisor-led model portfolios. Again, this is not done through the manufacturer. So AMCs are not involved. AMCs are involved in active ETFs and ultra low-cost structures. So will India follow the global path? Evidence suggests so. Like I said, a true barometer of the growth of the industry is the number of folios. And if 21% of the folios are already in passives, I think this number can only grow. For now, I would not obsess so much over the absolute number of AUM. I would definitely like to monitor the number of folios more closely than just the AUM. AUM, as we know, is skewed by the participation of a few institutional investors. So will India evolve its own hybrid model? I like to believe that as with anything in the mutual fund business, India will evolve its own hybrid model. And of course, I see the future in both active and passive existing together. So, which direction is it headed? I would definitely, we were having a conversation outside, and I was asked to hazard a guess. I would definitely say that 25% of the market, of the mutual fund market, will certainly be in passives, and over a decade, it could even increase to 30 to 40%. And I like to believe that there is an opportunity for AMCs to make money in it. There's opportunity for the distribution community to make money. And of course, finally, the bedrock of anything, the investors. I think it's a great product for the investors as well. So over the course of the day, what we will do is we will talk about the business opportunities in passive funds. We will talk about how distributors are able to build a business around passive funds. We will see how you can construct portfolios using passive at the core. So we have a lot of action lined up for you. So I'm very excited to kick off the event, and I wish you all a wonderful day ahead. Thank you so much.